Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, January the 22nd, 2023. I am putting on this update prior to the Globex opening due to some other commitments that I have later today. So, as I discussed in the Eye of the Storm podcast yesterday, that I was going to go over the alternate view or the alternate count, which I have been running, which I have kept in mind, but may come into play. Now, I'm starting here on the daily chart in the S&P. And actually, I'm just going to remove this one so that I can just reveal this. Friday's reaction to expiration, to whatever possessed and pushed the market, whether it was a volatility push, a gamma squeeze, a short squeeze, just going to a number because that's where larger firms were going to get out of positions. Whatever was behind all of that, it was, number one, it was impressive. We saw the Dow go up 330 points. We saw the NASDAQ cash go up 324 points. We saw the SPX go as well up almost 75 points. Those are very strong upside moves. And in the current position that I had and still have for the S&P and for the NASDAQ is that it was a corrective small, minute wave 2. Now, I have really gone back and forth and stripped it all and relabeled and looked at the labeling, and tried to put together some different scenarios on what's actually happening here. And when I broke it down and I took my time and went from the candlestick charts down to the line chart, which takes all of the extremes out of the market, and I can actually just see the moves that have taken place. And doing that presents a very different picture of the market. It still remains within the current labeling that I have. But before I get into that, again, I'm not going to go over, again, to discuss what truly was behind Friday's strong rally, and except to say that, again, I think that as traders, we need to really approach the market with without a directional bias. We're not bullish, we're not bearish. That opens the door to actually just go with the flow. And whether you're a swing trader or a position traders, you're still positioning for this larger move that's going to come, whether or not we zip up much higher from here or not. The larger counts continue to suggest and indicate that we are not in any way, shape, or form, in my view, beginning a new strong upward move. Regardless of what we saw on Friday, regardless of what, and again, I have to say that I truly appreciate everyone that comes in and gives me additional information or their view or their ideas or their thoughts on what's going on. It makes me think. So I'm not at all, as long as you're not just spelling out like, oh, you're a fool, you're an idiot, but more just contributing to the conversation to make us all think, to make us all look at what's going on and try to determine what is the next move. How should I position? How do I need to do? Now, back to the trading discussion. I really do believe it's like, for what it's worth, folks, again, I'm no longer an options trader. I'm no longer a position trader. I'm not really even a swing trader. I'm a day trader. And as I stated in the update, what's really come out of all of that is that I've really come to enjoy and just basically scalp pretty much the whole time that I'm trading. whether it's going to be a scalp that's going to collect $2 or $3 or $4 or $500, or whether it's a scalp that only gets $100. But more grounded, what I really got to say is we really need to adhere to our own trading rules. And again, I'm just going to talk because there's really basically three in my mind. The trigger or the entry, that's where we're going to get in, and what that trigger might be. Maybe it's moving average. Maybe it's the completion of an Elliott pattern. Maybe it's reaching a Fibonacci resistance or support level. Whatever is going to trigger, so you know what your entry is. Then you must have your goal, or what is the intent of the trade? What are you looking for out of this trade? Either a monetary amount, or if, let's say, for example, that it broke above a 20, then you're going to start moving average. You're going to start to think, we should go up to the 50 or to the point of control. If it's cruising down and bouncing off of a value area low, then maybe it's going to go back up to the point of control. That's the plan. So in other words, either have an idea as a scalper. I'm like, well, I want 150, $200. And then the third and truly most important, that traders tend to walk over and walk themselves into some stronger problems that they really don't need to do. And that is, you have to have the point where you will exit that trade if the trade becomes invalidated in terms of what you're looking for at that particular moment. If you can maintain all three, you're going to keep your mindset in order so that you're able to just keep an eye and a focus on what the market is doing. And let me tell you, on Friday, it really would have come in handy, because even as a scalper, you get to a point where you're like, wow, they're just going to buy. They're just going to buy. And then when you pull back and you look at your charts, they're all just heading higher, heading higher. So you could set yourselves up, go with the market rather than fight the market. Enough said. Now, I want to just go over quickly the alternate count that I have. The major alternate count that I have is that I'm going to be moving this primary A wave over to what I have marked as the intermediate wave 1 of primary wave C. So that would suggest that primary wave C is not in process right now, that we are still within a primary B wave. So, and I know I haven't pulled it all out, but all of this gets dropped down a degree. This would then become intermediate A. This would then become intermediate B, and this would become intermediate C, primary A. I decided not to go through with that because I just have to turn it around, because I'm not really going to employ the alternate count right now, but I want to show it and tell you what we can project if indeed this is what is in process right now. So if I'm looking for a primary B wave, and I have to figure that this is going to be intermediate A of primary B, and then what do I have next? This has to somehow, if we're going to rally up now, somewhere down here, we got to put an intermediate wave B. This is where I start to have problems with moving and declaring that this is the count. But let's say that it is. This would have to be intermediate wave B, and we're in the intermediate C wave, which should take us higher. Now, what I have here on the fibs are the fibs for a primary B wave. So in other words, from the all-time high down to this low, that's wave A, we're looking to, again, what are the retracements for a primary B wave? And if wave A is going to be an ABC, that does leave open the potential that the B wave will be an ABC, but it could carry enough potential, and we would have to consider if it were to become an irregular B wave, and that would suggest that we go to 1.382. So when you're getting a lot of counts and people that are discussing, well, I can say we can go up to all the way to 5,000. Yes. All the way to 5,100. Yes. If the alternate count becomes the preferred count, that the market has to demonstrate, that is essentially what's going to happen. So how does that occur from here? Well, first of all, as you can see on our daily, on the daily chart, the pattern, it's, yes, that was a dynamic rally. And now everyone's like convinced that there'll be follow through, convinced that Apple's earnings are going to be good, Amazon's earnings are going to be good, Google's earnings are going to be good, Microsoft's earnings are good. Everybody's going to start knocking the socks off of earnings, including Tesla. And so the narrative begins, and CNBC knows that anything bearish does not sell airtime. Bullish sells airtime. People are going to come in and they're going to tune in, and therefore they can charge more for the advertising. And I kid you not, folks, I kid you not. Remember, CNBC is not on the air to aid investors. CNBC is on the air to make money. And how do they make the money? Advertising. So bear that in mind about false narratives. But if this count is going to come through, then this rally that's starting now, after an absolute crazy, insane bunch of junk, threes, and this lasting rally, which is ending up being a 5, but not a 5 that's going to explode higher. So again, I feel that if it does, it's going to have to go above 4,180, 4,180, which is that high, to knock out the intermediate wave 2, and then suggest that this goes here and we're in this finishing B wave. Now, if that's the case, the rally has full power, and expectations would be that we will probably at least get to 4,300. Then we have 4,423. Then we have the all-time highs. That would be where all of those come in. And again, if indeed this takes off, if this is going to be intermediate wave A of primary wave B, and this is intermediate wave B, that's where I have a problem, but let's just say it is. And we're going to look at where intermediate wave C can come in. Well, we just put it up. Again, 100, 44.65, 44.22, there you're looking. Wave C would be equal to wave A, if that's the case. So our numbers are going to give us confirmation of the potential for an upside. It is not in any way suggesting that this is what's going to happen. But we can connect fibs that give us that higher number. I can connect additional fibs that tell us about the potential to get up above 48.08. Again, if we're doing it just on the straight where that B wave can come in, then we got these much higher numbers. But that doesn't suggest that's where it's going to go. Because again, the second part of all of this that I think we need to consider and realize is, okay, what's going to get it there? A false narrative? Eventually somebody's going to come in and go, well, this is crap. This is nonsense, and pound it and get out. So that has to have something behind it that realistically has already occurred to give the momentum, to provide the catalyst to reverse positions and head higher. And under the current constraints and the current views being given by the Fed, by large banks and other analysts, talking about how the United States and globally, the balance of the globe, is moving into a recession, not a new bull market. Now, we'd be looking for a period of deflation and not inflation. If they want to tell me that deflation is dead, okay. But what comes next is not a collapsing dollar. is not what we're seeing in gold, is not what we're seeing in the bond market. Not yet. So again, against what people want to believe, it's just not lining up fundamentally. It's not lining up treasury-wise, interest rate-wise, Fed-wise, what's going on in the globe-wise, what's happening right now. Inflation is not coming in because of how they conduct the numbers, how they run those algorithms to produce those numbers, those year-over-year figures. And it's like they're basing it on that crude oil has come down. Okay, crude oil, gasoline, yeah, that's big. But I want to tell you the other biggest part that they don't include, and they have to do separately, the year-over-year figure. Take a look at the groceries. Take a look at going to the grocery store. Take a look at buying products, paper products, any product that you're going to put in your house. You need to replace tires. You need to get your car fixed. All the things that we need to do to live and to keep our lives in order. Has that price come down? So why would we immediately just believe what some false narrative on a financial media is saying, well, inflation's dead? Really? I'm not sure what part of the world they live in. So to say that it's dead and it all turns around from now and just gets better and better and better, it's like, okay, but we need to understand, this is again, my opinion. I believe that so much of the marketplace, so many investors, they only know how to buy and hold. So yes, we need to sell them. Yes, it's a bullish. And yes, hang on. You're in it for the long haul. Get long, get longer. Because that's what they need to hear. That's all they know how to do. And I'm not trying to be insulting here. But buy and hold has been the strategy for the last 60 years. How else do we hear in these news stories that we get, if you had invested $100 in such and such a stock 20 years ago, this is what you'd be worth? It's like, why would some news source think that that's something to tell us? Because they want you to come in and do it again for the next big ass rally that's going to come or not come. So again, feed the public, feed them the information that they want to hear to get them back involved. Then we have all the asset managers that have to put the money to work. Every time they get all this new money that comes in from 401ks and FIRAs and everything else, they must come into the market. So we have a lot going on. Again, if the market's going to race, the first thing it's got to do is get itself above 4180 without stopping. It's got to go, because from here, it's got to go. Just has to fly. Okay, now I'm going to take this and that off. I'm going to drop down to my hourly chart and show you how I drove myself crazy. Now, originally, I'd even put this on as where minor wave 2 had completed, as this being a very strange and diagonal 5. I took it back and I looked differently at the market and put the 5 here, and this is a wave 2. 1, 2, 3, 4, 5. Minute 1. A, B, 1, 2, 3, 4, 5 maybe, or it's all done now. Complete for minute wave 2. What comes next? Minute wave 3. I'm going to hold on to that, not because I'm being stubborn or I don't see the market correctly, because I think that why this happened is now done. Expiration is over. We may see some position squaring as firms now realize how they came out, how much got exercised or assigned, and what they need to do to even the position. In other words, to either make it delta neutral or to kind of balance it out a little bit. And that'll come initially from buying or selling the future. So we may have a higher move, but if they come in and they bop it up 50 or 60 on the opening of Globex, it's going to give a lot of credence to the alternate view. But in order to break it down from here, we need to get above on this level to if indeed the minor two is still in play, we need to then break, I'm going to say here. And again, folks, what I did, I go down and I use the line chart, and you can see the line chart. So what it needs to break is 40.28, 40.30-ish. From where we are, that's where it needs to break to at least then reshift the count to the possibility that it is this very strange but workable triangle pattern up off of the lows that we had back in, we gotta shift up to the 4-hour chart. The lows back on mid to late December, the 22nd of December, that the wave 2 is still in place. Then we have a little bit more room. We have room actually up to 468, 4,068. I remember that as a resistance area. And if that's the case, fine. Then we rally up, and it's still going to be a wave 2, and it's still going to drop. But we go up first. Now, I am leaving open that possibility that we could get ourselves up there, and I'll adjust it, because this against this, the only way you're going to be able to count it is even if I have to put the 3 here and this is all a 4, well, it doesn't necessarily really work. On a line chart, it does not work. It already came cruising past 4, actually the wave 1. It already cruised almost lower than wave 2, but it in my view, it really doesn't fit. But again, one thing I also discussed is that because of the increase in derivatives and how things are trading, I and others are seeing some differences in how we count our Elliott, how we count the moves. Certain waves are getting expanded. Certain waves are not coming in as expected. Certain waves, the interior structures are getting pretty weird. And I think that that's just a product of how the algorithms trade and produce a lot of these extremes that we see, which is why you'll see me use a line chart more often now. Now, for tomorrow here in the S&P, we have to, of course, allow for some additional upside, and it may come initially right in Globex. We'll see. But I believe there's enough out there for the market to not really have some stronger strength. So what I want to take a look at right now is what we have in terms of economic figures coming out next week. Now, we don't have anything really. We have leading indicators at 8:30 a.m. tomorrow, but basically that's not marked like anybody's going to care. What we have on Tuesday is a PMI composite flash at 9:45 Eastern. On Wednesday, we have nothing. Now, on Thursday, we have durable goods, GDP, international trade in goods, and jobless claims. And then on Friday, we have personal income and outlays and consumer sentiment and pending home sales. So it's toward the end of the week that we see something. Beginning of the week, we'll see what happens. We have earnings. We have lots of earnings next week. Let's take a peek. We have Apple actually with the week after in February. AMD on the 31st, which is not next week. And Amazon February. I know we have some. Hello, who is it? Wow. A lot of this coming in. Now I got to look. Wow, this is interesting. Did they all change? We have IBM on the 25th. We have, Intel on the 26th. Meta on February the 1st. I knew we had somebody else down here. Microsoft on Tuesday on the 24th. And Tesla, come on. And Tesla is on the 25th. So we have Tesla and Microsoft next week. And that could really put some meat or not. Microsoft, they wanted it back at 240. They got it at 240, but don't forget, Microsoft, they're the one that's like, we're laying off all these people and the CEO sends out a letter and everybody gets crazy on the stock and sells it off. Okay, so all of that is just now moot. That doesn't make any difference anymore because they bought it all back? I think not. All right, so moving average wise, you can see that the 50, this is on the hourly chart, the 50 turned and starts to move higher. The 20 is turned and moved higher, and the 200 stopped and got flat with a slight little upward bias. RSI, a little bit oversold. So I think we can start pulling back, and if not, we really start to fall. I'm going to jump over to the NASDAQ, and we'll take a peek. NASDAQ is really the same thing. I redid the count. I looked at it. And basically now, instead of all of this double and triple and all this other stuff that I put in there, I really went back to the line chart and I looked at it cleanly. And that is 3 up. This is 3 down. And now we're doing the 5 up. And I believe we completed it at 11,721. That's the current high right there. So let me go back over and move it back to candle. We can see it actually is higher. But let me go to this guy. It's going to be 11,759. That's what this market's got to do. It's got to break above there. And truly and honestly, folks, if anything, I'm going to move the 3 up to here and make this the 4 and call it whatever it is being weird. And this is going to be a 5th, and the minor 2 comes in a little bit higher. Now, what can I kind of look at here in terms of if this is indeed a 4 and I move the 3 up there, I am going to go and do there to there to there. If I got to change this count to make it look really weird, what do we got? Well, you know, we can get ourselves up there above that high. We have 11,777. We have 11,831. And if indeed wave 5 would be equal to wave 3, we got a double up here, 11,975, call it. So yeah, there could be upside room, but it doesn't take away the fact that it's a new bull market. It does include some of these. And it doesn't mean I'm wrong. It doesn't mean anybody's right. It just, let's follow the market. Let the market tell you. Trust me, everybody wants to pin bearish hat on me. I made damn good money on Friday and I day traded and I was trading from the long side because that's what the market was doing. I'm not going to stand there and fight the market because my count tells me. So we don't need to be foolish and hang our hats on something like that. And I don't think it's a war between the bulls and the bears because, again, I had approached the market without a directional bias. So here as well, I think what we got going on, we do have all of our moving averages still pointing higher, but that was a very strong. And also, I forgot to mention, if any of you really looked, this thing plowed higher on small, light volume. It was a true absence of sellers because they all wanted to buy it up to get out of positions. So there wasn't anybody to kind of cap that off and bring it back into line. So smaller players, even some of the bigger banks, they were like, fine, do what you got to do and let's just move on. It was not big volume. And that is a key factor that you want to look at for the start and building of a stronger, longer term, steady, strong rally. It was light volume, and they moved to 300 some odd points on light volume. So again, let's keep our wits about us. So yes, we're going to allow for a little bit more upside. I am not going to leave that up because I'm not sure that that's actually what's going to happen, but you can mark those down. Again, this was for here. If indeed, again, oh yeah, forgot. I forgot to go over and tell you if I had to move the A over to here and what the B wave could do, if it's still being in progress, that this would be wave A. And being that A is and B, it's pretty flat, right? If I had to say that this is A and this is B, that's pretty flat. I'm not looking for C to cruise. I'm not looking for C to break all things and just run. If anything, maybe we get up back to 12,000, right? Because it's a flat, not a zigzag. It's a flat. And that does mean, it would, if it could power higher, we'll get somewhere. But I just don't think it's going to power higher. I don't think that there's enough underlying current and catalyst to do it. So right now, I'm leaving it as is. But if it does present itself and I move the A over to here, and then we're in that B wave, and we're looking for the possibility we can get up to 12,884 or 13,626. B waves, it does have the potential, but it's going to have the catalyst to do it, to get itself all the way up and make a new all-time high. And that would be up here. Now, tell me, do we really think that the market, which is having a trouble getting itself back up to 12,000, is going to bolster enough steam to get above 16,000, 17,000? Now, all things are possible. I will give you that part, but yeah, I don't necessarily see it. So I'm going to remove that. I am going to put back up just the retracement for a wave 2. And what we got going on right there is we have not hit actually the 618. Let me go back down. We got close. 618 is 11,735. Now remember, that's just what we got going on here. So I would just have to shift the 2, not reinvent the whole thing. Again, how in God's name this would be a 4, I'll wait and see. But if it does, we have 11,735 and then 11,872, 870. But anything above there with 5 waves, and if I could do it, 1, 2, 1, 2, 1, 2, could be. We'll see. I'm not looking for it, but I will trade it if it presents itself. I am not going to sit it out. My goal is to earn my dollar amount each and every day that I trade. That's the goal. And to know when not to trade, when I'm going to stop, when I'm going to not take on more risk. But if the market's going to show me that it's going to power higher, I'm going to play along. Why wouldn't I? So this is where I'm going to leave it for today, folks. Have a great trading day tomorrow. By the way, I know Globex opens in about 6 minutes, and basically looking like it's going to open unchanged. So we'll see. We definitely will see. Have a great trading day. Next update will be on Monday, the 23rd.